Are you looking to purchase a home and you want to know what your credit needs to look like? Okay, here's the deal. Credit is the big thing that I have so many questions that folks come at me about on a daily basis. Where does my credit score needs to be? So let's just start right with it. It all depends on the loan program that you're going for, right? The different loan programs all have different credit score requirements based off your particular situation. But let me also tell you this. In my 2.5 decades of being in this business, the bank is not looking for perfect credit. We're looking for responsible credit. It's very few times do I see perfect credit score, perfect credit profiles, because guess what? Life happens. Businesses get in tough spots. Divorces happen. People get sick. You lose jobs, all types of things that happen that can affect your credit. So again, we're not looking for perfect credit. What we're looking for is responsible credit. That when you borrow money, you're efforting to do your best to be able to pay that money back on time. And sometimes that doesn't lead to perfection. Okay. So now, minimum credit score requirements. It's all going to depend. In general, generally speaking, if you're doing a FHA loan or a VA loan, most of the banks want you to be living in that 580 world. Now, are there cases where you can qualify for one of those loans and have a lower credit score? Well, yeah. For instance, on the FHA loan, if you're putting down at least 10%, you can go down to a 550, right? If you're a VA loan, it's cases where, you can go down as low as 500, 520, 530. But understand, when you have the lower credit score, it's going to make it more difficult for you to be able to get that loan approval and also get favorable terms. So just to kind of draw the line in the sand and give you a general idea, FHA, VA, typically you want to be at a 580. Now, if you're doing a conventional loan or USDA, typically the lenders want you to be living right there in that 620 world. So the 620 world, if you're USDA or conventional. Now, if you're doing one of the down payment assistance programs, now, again, there's no such thing as a down payment assistance or a first-time home buyer loan. What it is the first-time home buyer program. You're still dealing with a underlining FHA, conventional, USDA, or VA loan. Now, depending on the state or the county that you're in, sometimes those down payment assistance program require a little bit higher of a credit score. So sometimes it can be as high as a 640. So just to kind of get that in your head, again, conventional, USDA 620, FHA, VA 580. If you're dealing with a down payment assistance program, some of them require you to be at least a 640. Now, when we're looking at that credit report and we're reviewing your credit when you're going in for your loan approval, we're proactively looking at it, and we're also looking at what's happened the last 12 to 24 months most heavily, right? Sometimes I have clients that get so caught up in things that happened, 3, 4, 5 years ago, or inquiry that's on there 2 years ago that's not right, or there's an address that was on there from, 10 years ago that's not accurate. I've been in this business 2.5 decades. I've yet to see someone not get a loan over inquiries or an incorrect address. So get with your loan professional as soon as you possibly can in the process so that we can do a thorough review of that credit so we can really determine what's affecting you and what's not affecting you. There may be some things that you need to pay off. There may be some things on there that may be derogatory, but you do not even need to touch them. I call it paying with a purpose. If you're going to pay something off, it needs to be getting you closer to your goal of purchasing a home. Now, the other thing with credit, again, as we said a little bit earlier on this content already, we're not looking for perfect, but we are looking for responsible. So you want to make sure that you're doing every single thing that you can to make your payments on time. 30-day late are the absolute biggest killer of a credit score. The next thing that's a big killer is your credit utilization, right? Maxing out credit cards. Okay. Good rule of thumb. 50% is good. 30% is very good. 10% or less is great. So if you have that $1,000 limit credit card, you want to try to stay under $500. Good. Under $300. Really good. $100 or less, you're doing great. So when you're coming in and you're looking at your loan and we're looking at your loan application, We're looking at, again, we're looking for responsible credit. We're looking at where you are right now, but we're also looking at things that if you're not quite there, how we can help you to be able to leverage it. But be very careful about looking at your credit report yourself and coming in and making conclusions and jumping out there and paying off things and doing things where it may not be necessarily putting you in a better position. There's all kind of information that's out there, online about things you can do to improve your score. But if you're going in and you want to get a mortgage, right? If you're trying to get approved for a mortgage, the key would be talking to a mortgage professional, because we're looking more at just what the credit score says. We're looking at the overall breakdown and history of that credit report to determine if you're a good risk to be able to purchase a home. So there's services out there like Credit Karma, Newegg, and just all types of credit monitoring services, right? But what we're pulling is what's called a retail mortgage credit report, or RMCR. So when we look at that credit report, we're looking at it based off of the algorithm that the mortgage companies are using to be able to determine your credit score. So sometimes when we look at your credit report and we review it, it may be different, a different score than what you have on some of those credit monitoring services. It doesn't necessarily mean that those services are wrong. What it just means is they may not be relevant, right? They're not lending any money, right? None of them are giving you a mortgage. So the mortgage company and the RMCR is what you want to really get your arms around and be able to understand what your mortgage score is, so you know exactly what you need to do to be able to take that step towards home ownership. Now, the other thing that can affect that score as well is your mixture of credit, right? You have your revolving credit, money that you borrow, pay it back, like lines of credit and credit cards. Then you also have your installment credit, like car loans and student loans and mortgages, where you have a set amount that you borrowed, a set term, and you have a set payment each month. You want to have a good mixture of both. I can't tell you how many times someone's had a lower credit score and I look at the credit report and it's just because they don't have any credit cards open. So you may have to open a secure credit card or two just to be able to get that mixture and that portion of the type of credit on your credit report that's going to help those scores go up. So I tell folks absolutely all the time, if the credit is in a good spot already, maintain it. Keep doing it. Keep focusing on being responsible and doing everything you can to pay on time, keep your utilization low, and keep the proper mix. If you're someone who does not have your credit where you need it to be, you still want to be able to get with a mortgage professional so we can see exactly where you stand right now, so that we can put you on a clear game plan of what you need to do to be able to get your credit in a place that it needs to be. So if you're going in and you're reviewing your loan and the bank is reviewing your loan application, yes, the credit is going to be a very big piece of it. But what we're not looking for is perfection. What we're looking for is responsible credit. If you like content or you want to hear more content like this, please like or subscribe. Please drop any questions that you have in the comments below. And I thank you so much for your time. Make it an awesome day.